This is Data Trader Pro with your nightly market wrap for Monday, January the 25th. Basically, as you all know, we had a very strong bear market rally starting Wednesday last week. Lasted 2 days, almost exactly 100 points on the futures, on the SP 500 E-mini futures, from the bottom around 1804 until the Sunday night, Monday morning overnight high of about 1904. ES and the SP likes to move in chunks of 50 and 100 points generally. We saw a lot of 50-point days in the last couple of weeks. So basically, we were expecting a rally. I actually expected, was thinking that it would last a little longer. But we never touched the overnight high during the day session and promptly moved down. Got a little stronger during the end of the day, and we'll look at internals to confirm that shortly. But basically what we have is a move off the low on a good hammer candle. Generally, these corrective moves are in three wave moves, so you'll get an A, a B down, a C. The B may go down a little more, but I think probably we'll end up targeting the 20-day moving average, something like that, around 1940 SPX roughly, maybe 1930 on ES roughly, give or take a few points. Remember, big issue this week is FOMC. So, meeting, and I'm not sure if there's a press conference this time around, but those meetings tend to be market pivot points. So, either new rallies or a new, resumption of the bear trend will probably start around that meeting. Generally, we get big moves, as most of you know, so that's what we're looking for. Internals were bearish. We never met the pre-market high, so when that happens, when you don't tend to meet the pre-market high in futures in the first hour of trade during the day, you're generally going down, and that's exactly what happened. Let's have a look at the site, and the internals will provide a little clearer picture of what's going on. We've got the market map here, looking at advanced decline ratios on NYSE, bearish. NASDAQ combined, a little less bearish, obviously, not too bad. We've seen a huge improvement in the ratio of 52-week highs to 52-week lows. These were buried in the basement last week, so basically they didn't have any lower to go. And we had our 100-point rally, as mentioned. These came up as suspected. Same thing on NASDAQ, came up quite a bit, but still, everything's red on NASDAQ. Pretty much everything's red. On NYSE, 52-week lows came off, obviously. But they were so low that they couldn't have gone any other direction really. SP 500 advanced decline bearish, 9 to 1 negative, quite bearish. VIX was up. Trends were not bad. NYSE and the NQ100 pretty flat. Dow Trin flat. Russell Trin bullish. So I tend to think that maybe we might see another slightly lower low tomorrow, but my guess would be that we make a low fairly early and then bounce for that next wave up that will probably complete before the FOMC meeting later in the week. And then who knows? I mean, my guess would be we resume down from there, but we'll see. Anyway, the internals picture bearish, but not horribly so on everything. We're certainly, when you see Russell Trin, this is a little bit of a canary in the coal mine. It tends to show a little bit of early reversal pattern, but not always. So we want to look for a confirmation in price. Russell was very bearish today, but made a higher low. So we'll see. We'll see what happens in trade tomorrow. Sectors overall were bearish. the oil rallied late in the week about 9% and lost 8% of it today. So oil's going nowhere fast. A lot of people are talking about the correlation between oil and the markets. I'm not that huge a believer in that right now, because oil's gone down from $107 a year and a half ago down to under 30. So I think whatever factor that's had on pulling down the markets is just about extinguished, if at all. So I don't think that really, oil going down from 30 to 26 is going to be a huge factor in moving the markets now. I think, stocks have just been bought and bought and bought on every dip for 6 years now. So I think, people are doing some selling, and rightfully so. There's some profit taking, and I think these things go in cycles, and you're going to see some profit taking, and then you're going to see a strong rally come out of this. Whether it's going to be a lasting rally or not, well, it remains to be seen. Let's look at the trend page quickly. Basically, neutral range day called at 10:15 Eastern Standard Time as per our indicator. We generally traded as an inside day. For much of the day, things were, on the bearish side, but not heavily so. We saw a little bit of a rally happen into the early mid-afternoon after lunchtime, and we started selling off. The selling really accelerated, really at about 3 p.m. And the dollar-weighted buying pressure, which is our own index of key market-moving stocks, really bled off. So there was a lot of selling in the key market movers, particularly at the end of the day, but we'll see if that continues. This pattern doesn't show a strong trend, although it got quite bearish at the end of the day. The DTP MCC, our own version of the intraday McClellan oscillator, bearish all day, never got into positive, unlike the dollar weighted. The net issues were bearish all day, never coming close to zero. Net volume always starts at about zero, because that's when the buying and selling starts early in the day, but trended down all day. So when it really broke late in the afternoon, you could see about here, it was after about 1:30, it just broke and never recovered. So bearish close. Not the huge range we've seen in the last. I actually had to move this from 50 SPX points to 60 SPX points, because we've been seeing such high levels of volatility. I've seen a lot of 3% days lately, so really about a 28-point SPX range today, which under normal circumstances would be a big range. Today it felt small, given the high levels of volatility we've had of late. Breadth, bearish across the board, as we're about to see. So we closed near the lows of the day, as you can see, the white triangle markers, low of day, high of day. We closed near the lows. Net volume moved down pretty much the whole day on all of our indexes. NYSE Trin reasonably neutral, NASDAQ Trin neutral, Russell Trin, as mentioned before, getting into the bullish side. So maybe a little bit of an early reversal warning coming here, but no confirmation yet. Volatility was sold off heavily on Friday on the tail end of the rally that we got. However, it's come back to the levels, I would say, of early Friday or midday Friday, something like that, taking back a lot of the bleed that they experienced. VIVX, the volatility index, back into green. So as long as that's up, that confirms a move in the VIX. VIX percentage is green, up all close to 8% today. VXST, the short-term VIX, up close to 15%. VXV back to green. So when this is up, there's that's 3-month implied volatility index. So basically, it's not just a short duration expected move that people are projecting that this move could last. So we're going to be cautious about longs in the market until we see VVIX bleed off again. The futures go into from backwardation into their regularly normal state of contango, and VIX bleeds off. So we want all of these three indexes to be red to feel confident about longer term longs. Otherwise, it's all short duration trades. Trade a 1 hour chart, a 30-minute chart at the most right now. That's what the market's moving on. Let's move on to block trades. So what we're seeing now, we didn't see heavy distribution. We saw some distribution at the highs, a couple of big prints. That would have been on Friday. So since we never really broke above here, that confirmed that they were distributive trades by institutions, and we dropped, sold every little pop, as you can see on the SPY, and potentially some accumulation starting, some decent sized prints. To verify those print sizes, let's go to the summary page, and you can click open as always. And verify all the prints. Right, we got 1.5 million, we got 2 million. These are after close. There was a lot of 500,000s. A pair of almost 4.2 million trades. So quite a lot of trade activity in this 187.60, 187.58, same price roughly. So look to those levels, 187.54. So we're looking at as a line of demarcation, very important level, millions of trades there. Should we be able to sustain trade above the 187.50 to 60 area where all these trades are occurring? Good, bullish, and we're due another leg up. If we fail to maintain that price, we're going down again for another leg, because those almost certainly will have been sells at that point. Let's check out the Qs. Quite a bit of volume also, 102.16. You can go check out these. So 103.75 was probably a sell because we went another $1 or more below that. But we're seeing a little bit of volume come in at the end of the day. Certainly IWM had some, there's a big print here, 99.05. So the 99 level, it seems pretty critical in IWM. Big prints at 101. That was $2 ago, so that was probably a sell. So not huge accumulation in IWM yet. Let's go back to the charts, block trade charts page for the index ETFs. So we see a little bit of what might be accumulation, a little bit of what might be accumulation here with a 1.5 million print, a little bit of what might be accumulation here with that million print. But again, use these levels as demarcation. Let's check out the volatility ETFs, ETPs. Nothing too heavy happening here. It might be a little distribution at highs. Well, that remains to be seen. We'll have to see what price does. XIV, it was very likely a sell here. Price moved down, price came up, never went above, boom, fell again, right? So not a whole lot going on there, though. Let's check out the metals space in terms of block trade institutional activity. Okay, some decent sized prints here. Well, not that heavy yet. So 700,000 and almost 600,000. So whether these are sells or not, obviously 106 level in GLD, your line of demarcation. GDX usually has quite a few prints right at 4 p.m. Some of that may be ETF rebalancing from the leveraged ETFs that are GDX based. But again, use that as your line of demarcation. 1338, 24 million shares, right? So take that seriously. Silver, not a whole lot going on. Definitely some accumulation here. Price fell down, but it popped right back up. But it's really been unable to have a sustained rally. So nothing much going on there. Big mover today was USO oil. So we've been seeing some very erratic activity in oil, and on the block trade front. So we had some what we thought were accumulation here. price dropped below. There was more big prints down below, and then price shot up. We had a huge rally last week, but we've lost most of that. We're not down to the lows of where we were middle of last week, but you know, we're getting some block trades in here as well. So you know, the 855 level on USO, which was roughly where these were, 845, 855. So we're still holding this prior level. So I would use that as a line of demarcation, roughly 845 on USO. If we break below that, you know, we're probably going to new lows, especially if this level doesn't, you know, the $8, $8.15 area doesn't hold. We're going to go down some more. If that can hold, if we can hold this 845, 846 level roughly, where some of these guys were, and they may have been fresh buys, but we'll have to find out later, we should get another leg up. UNG has been chopping around. Look at that. I mean, there is no trend here. You know, there's a reasonable size buy here, but nothing huge, and we've just been chopping. You know, and natural gas is very seasonal. It's not like winter is over. We've had a big storm in part of the U.S. There may be a fairly decent draw in storage coming up this Thursday. That remains to be seen, but there definitely is no trend. There's a huge move up, you know, around Christmas, early in the new year. We bled off a lot of that move. We're looking for probably another move up, but nothing is confirmed yet in terms of block trades on UNG. I think that probably covers it. I just want to go over something about the site in general. DataTrader Pro. We're a new site. I'm constantly adding new features. There are 2 or 3 new pages that are going to be added over the next month that I'm currently working on. They're going to be focusing on trading the SPY, since that's probably one of the more common instruments, more popular instruments to trade. It's the ETF based on the S&P 500. We already have a block trade chart on the SPY. But that only goes back 5 days. So people have asked for longer-term block trade charts. So I'm going to try to get data back going for 6 months to a year for SPY. So I'm going to do a larger, longer-term block trade chart, as well as a couple of other really funky, interesting charts that are going to make trading SPY much easier. I'm also going to add something. I'm not sure whether it's going to be a chat feature or a streaming message board or video updates, something along that line, so that I can provide some intraday updates to the subscribers. I think that some intraday communication of key market changes is currently missing, so there's going to be something in that space in the next week or two. I'm just not sure what solution would be best for everybody. I like the idea of posting an intraday short video, but it needs to be streaming, and there are varying technologies. You know, not all of them are great, is what I'll say. So I'm looking for a good solution for that. If I can't find that, I'll have a streaming message chat or a private Twitter feed or something like that. Anyway, I just wanted to update you on that, especially the members, and stay tuned. Lots more good stuff to come. So that's it. That's going to wrap up our daily market wrap for Monday, January 25th. Thanks very much, and stay tuned. We'll have another wrap tomorrow. Thank you. Bye-bye.